time has already delivered its verdict. The tariffs launched by President Trump were supposed to revive American industry and bring waves of foreign investment. Instead, the opposite has happened. Back in July, Seoul and Washington announced a framework. South Korea would invest $350 billion in the US, and tariffs on Korean goods would be capped. But the deal stalled. The reason? Trust. And the situation worsened with a raid in Georgia. In early September, more than 300 South Korean engineers from Hyundai and LG were detained at a battery plant site. They were flown home without charges, leaving families humiliated and companies alarmed. For Seoul, this was not just an immigration raid. It was a warning that the US may not be a reliable partner. The timing was disastrous. South Korea had already linked its investment to a US currency swap, warning that without guarantees, such a huge transfer could destabilize its economy. Now, with workers in handcuffs, doubts have only grown. Instead of opening the door to capital, tariffs and raids have created hesitation. Europe shows a similar pattern. Washington and Brussels announced a deal that capped tariffs at 15% and promised $600 billion of European investment by 2029. But the number is mostly symbolic. No one has explained which governments or companies will provide the money, or how it will be used. Public opinion polls show Europeans skeptical about sending capital abroad while their own economies struggle. Canada, by contrast, has chosen a different path. Ottawa has not rushed into tariff-linked deals. Instead, it focuses on nation-building, critical minerals, energy, ports, and housing. By presenting itself as a stable, predictable destination, Canada is positioning to attract capital while US policies create uncertainty. Taken together, the message is clear. The tariff policy has backfired. Instead of strengthening America's industry, it has fueled anxiety and slowed the flow of foreign direct investment. Independent research confirms this. Reciprocal tariffs reduce US growth, increase inflation, and push capital away. Add raids on allied workers and confidence erodes further. Tariffs may create headlines, but without trust, the promised billions will not arrive. The Georgia raid also highlighted a deeper contradiction. Washington is demanding hundreds of billions in new investments from allies, while cracking down on the very workers needed to build those projects. For South Korea, this risk is too high. For America, the credibility of being open for business is now in question. Another flashpoint is energy. In August, the Trump administration abruptly halted construction on Revolution Wind, a $6 billion offshore wind farm in New England. The project was nearly 80% complete and meant to power 350,000 homes. Yet, without clear reasoning, a stop work order froze everything, sending ships home, leaving workers idle, and raising doubts about federal permits. Connecticut and Rhode Island have sued the White House, calling the halt unlawful. Contracts had guaranteed cheaper electricity for 2 decades, but families may now face higher bills. Investors are asking, if a nearly finished project can be stopped overnight, what project is safe? Meanwhile, Canada is doing the opposite. Nova Scotia is moving ahead with offshore wind capacity of up to 5 gigawatts by 2030. Ottawa is fast-tracking reviews and linking wind power to hydrogen exports. The contrast is striking. One country dismantling confidence, the other building momentum. Tariffs on copper add yet another problem. A 50% import tax was meant to target China, the world's largest producer. Instead, it drove up US prices by 35% and sparked a wave of copper thefts, stripping phone lines, bridges, and public infrastructure. The National Insurance Crime Bureau estimates thefts now cost nearly $2 billion a year. Manufacturers also suffer. Appliances, vehicles, and electronics face higher costs, eroding competitiveness. Rather than reviving US copper production, the tariff created chaos at home. Canada, again, has adapted. Most of its copper is refined in Asia before entering the US, meaning Ottawa was hit indirectly. Still, Canada has moved to diversify trade, promote Buy Canadian, and strengthen its domestic market. Prime Minister Mark Carney has used pressure as an opportunity, turning caution into leverage. China also found ways around the tariff. A Chinese company invested in a Texas factory to produce copper wire locally, avoiding tariffs entirely. What was meant to block China has given it new openings on American soil. The bigger picture is undeniable. Trump's tariffs on steel, semiconductors, copper, and more were meant to showcase strength. Instead, they triggered instability, crime, higher costs, and hesitation among America's closest allies. The lesson is simple. Tariffs may make bold headlines, but they cannot manufacture trust. And without trust, foreign capital, the lifeline of U.S. industry, will flow elsewhere. America risks falling behind, while neighbors like Canada quietly prepare to take the lead.